Thanks for joining us once again. Today we focus on margin expansion, allowing Tesla's stock price to maintain its new high level and rise more. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some better ideas on investing and trading, please join us on Patreon. So we're heading into earnings right now for Tesla, and there's a huge question that's sitting waiting for an answer that we'll hear relative to earnings from Tesla in the next few days. The question is, how do the margins look? Now, as you know, what's been going on over the last, let's say, 8 to 12 weeks is that Tesla came out with earnings, I guess in late October, and one of the things we learned was that the margin for Tesla, which had been about 14%, was up in the 17 to 19% range. Today, I want to go through a three-stage process. One is what is the margin? Why is it expanding? And then the second part of that is, well, what's the reaction of the large investment banks and their analysts to that margin expanding? So let's start out with margins. So basically, if you have a company that's growing, or even sideways, if their earnings are expanding, their earnings growth is what generates growth in the stock price. One example I'll give you is Apple Computer. In the case of Apple, the raw number of phones that they're selling isn't accelerating rapidly, but with the App Store, they have all these ways like increasing fees that they charge to people who put their apps on the phone, etc., where they have large amounts of revenue that's actually growing. So they can actually have a nice growth in earnings despite the number of phones being flat. When we look at Tesla, one of the questions that I've been having about why does Tesla stock prices up, call it from here 50%, but it was 100% gain when it was in the 200 range, is this sustainable? And the answer to it is that if we're maintaining a 14% margin, no, it isn't sustainable. Well, let's ask this question. What if Tesla's margins actually expand up to 20, let's say 20% or 22 or 23%? Not only is the margin increasing, but we also have the issue that the Ford, when you look at the graph, there is an upward trend that is suggesting that we actually get better margins. So where might these better margins be coming from? Number one, as Tesla becomes the dominant seller of electric vehicles in Europe, US, and other markets, what's starting to happen, we get economies of scale. So as Tesla vertically integrates back to the mine and comes forward, they just have lower costs to begin with. Number two, as they sell more vehicles in these places, the tax credits mean, for example, in 2025, Tesla will get in excess of $1 billion from companies not selling enough vehicles to actually meet the goals that were set as part of the climate change process. So as a result, Tesla is getting more money because they're polluting less than some of the other manufacturers. Obviously, there's an interesting process with Mr. Trump that will happen here because he seems to want to drill more and not do the climate change stuff as much. And we'll see how that works out with Elon. The next issue that pops up is that, as you know, Tesla is a dominant player when it comes to installing megapacks. So, in general, this ends the portion of the discussion focused on what's happening to Tesla's margins. The final piece of the margin expansion is the total destruction going on in China right now when it comes to battery manufacturers. China has a process they've been doing where they're the dominant sort of final finisher of sort of EV batteries. And they've taken those batteries and put them in a number of different Chinese brands when it comes to EVs. And they've so successfully built out their infrastructure for EV battery production that it's now a glut. So Elon predicted that, there was a certain place that you wanted to be in the supply chain, which is producing batteries, particularly lithium-ion batteries. And as you'll note, that hasn't worked out very well. Answer, the price of lithium batteries has dropped by 75%, if not greater. So all of a sudden, your largest fixed cost in an EV vehicle just drops significantly in price. And every week or two, I'm actually looking forward to Tesla's process reverse integration, causing them to buy a CATL or some other nearly bankrupt producer of batteries in China, because this accentuates the process of them getting a hold of their fixed costs and making them the lowest in the industry, because they have their own Chinese-based sort of feeder for everything that the company's doing when it comes to batteries. So as a result, I was kind of skeptical of, well, what does all this mean and how does it affect the stock price as we go into earnings? Well, there's an easy calculation that you might want to make, which is take the revenue that Tesla had for the quarter, even for the year, and budget that at about $60,000 per vehicle. So if you divide the revenue by the number of vehicles produced, it tells you what the average price of that vehicle is on a revenue basis. And that number is not true because there's vehicles of different prices, but two, the revenue and profit from the Cybertruck as well as the Megapacks and even solar panels, that it's a small portion of the roof, all that is being blended in to get a per vehicle cost of construction. So why is this a big deal? Well, it turns out that the way you determine a stock price is often, well, how many vehicles did they sell? And at a certain price point, we should know within 10%, maybe 20%, what the revenue is going to be for the last quarter for Tesla. And I think that the answer that we're coming up with is that the stock price isn't above 400 because the analysts at the large firms are giving Tesla a nice upward trajectory rise because of these increasing margins. Where is it going to go? I think that 10 or 20 bucks within of where it's at currently is where it will end up. 450-ish, I think, is about right. But it really depends on how big are those margins that we're seeing from Tesla, and that'll answer the question for how high it's going up. Is this the end of the margin expansion that sort of benefits all this? I don't think so. And the reason is that since we started this channel 10 years ago and all the Bob Lutz stuff you've seen about Tesla's demise, there's this weird thing that keeps going on, which is I get, because of the shows I do and the research that I do, I got a lot of videos regarding new to market EVs that are being produced by others. I had a long conversation with an owner of a Tesla, and he made a comment to me. He said, I live in Sweden and I'm going to Portugal on a trip, and all I do is jump in my Model Y, and it's mapped out where I'll charge up on my way down and back. And it's a very simple process. What I found interesting is I've watched these videos, and they could be from Audi or GM or whoever the manufacturer may be. have you seen the photos lately of owners of $100,000 electric vehicles, not Tesla, that are having to sit for 1 to 2 to 3 hours in line to try to get a charge up so they can go home from competing entities? So as I watched these commercials, several thoughts came to mind. Number one, where do you charge that thing if you're not at home, or if you don't have easy charging, you're close to a high density area that doesn't have a place you can charge if you don't have a garage? Number one. Number two, it's like I'm in Washington, D.C. There's a lot of places to charge in Washington, D.C. Under grocery stores in particular. It's free. The problem, though, is you only get 2 hours of time down there, and there are fast chargers, but they're not prevalent as a choice. So what I'm fascinated by is that it's almost as though the large OEMs are ceding the market to Tesla, because when they put that ad up saying, we've got a beautiful car that has X amount of range, they can't answer certain questions, which generates range anxiety. Number one, do you have charging that's dedicated to your batteries? So it goes. Number two, do you have high reliability charging facilities for your cars? Tesla's running 95, 98% uptimes on its charging facilities, and they have more charging slots. Number three, do you have fast charging, or am I slow charging when I try to charge at your facilities? Those questions are never answered in the advertising I'm seeing. And so it seems to me that the marketing part of these large companies don't get it, which is, if you don't have ubiquitous charging that's reliable, 60% chance it's going to be working is not good enough. If you don't have fast charging, not good enough. So the battle, I believe, has moved to the charging realm, and most of the OEMs are completely unprepared. This means then that Tesla is going to get more market share, not less, even when new vehicles are being put out. Because what good is a new vehicle if you can't find any place to charge it, or if you're not locked into your home charging facilities and don't go any further? You don't have a lot of options for where you can drive your vehicle if you need to go. That kind of hassle is the kind of thing that causes people to embrace Tesla more. So the question then is, Tesla's going to come out with earnings. What's going to happen? Obviously, we're going to have our first day blast up of the stock price, but then we're going to go into this mode of those numbers are going to be carefully reviewed, and after they're reviewed, the large manufacturers or the large hedge funds and so forth are going to read the investment reports from several different entities to determine what are the trends, can we justify current stock price, and can we justify a higher or lower stock price going forward. I think because of increased margins and all of the reasons I gave starting at the beginning of our discussion, we see a nice, $30 to $50 pop in Tesla stock price within a week of when earnings are announced, because instead of Tesla potentially disappearing from the competition, they basically are bludgeoning the competition in multiple ways. So we look forward to your comments on this. I think that I'm very surprised because it's very easy for competing firms to do the market research to understand what consumers are concerned about. And I'm not seeing a response from competing firms that reflect a command of issues that are driving consumer behavior. This ends our discussion of earnings, etc. I see Tesla holding on to these gains and possibly adding more because of the reasons we covered in this video. Next, we move on to our health tips. This is just a reminder. Please give it a shot to consider 25 leg lifts a day before you jump into the day, as well as consider a 20-minute walk on a daily basis for health reasons. Also, just wanted to encourage you to consider a 2-week period of going to bed and waking up at the same time each day. Once again, I want to thank you for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, lahitro, hoda haifaz drasiche, ni hao ma. Namaste. And in Jamaica, we say, enough respect, walk good, man. Thanks for joining us. Have a great day, and bye for now.